Hey everybody, Chuck Barone. Wednesday, November the 23rd, 2022, the day before Thanksgiving, and we really, in spite of a crazy-ass government, crazy markets, crazy world, crazy situation, we all of us, each and every one of us, have a lot to be thankful for. And one of the things I'm thankful for is you. All you guys do every day to support the channel, watching the videos, your likes and shares, comments, questions, and all the things you do. One of the things I'm most thankful for on this Thanksgiving. In the markets today, kind of a choppy day. Actually was not really looking real positive, and then the Fed minutes came out. So stocks ending up today across the board with NASDAQ, S&P all rising. What happened was the Fed minutes came out, and the soothsayers got into those Fed minutes, and they want to find, they already, I think, have what they want to find in those minutes preordained in their head. And now they go finding ways to twist and take and, jerk it all around to make it what they want it to say. So basically the idea is now the Fed is not going to pivot, but they're going to pause. So after this rate hike coming up, we know we have in December, now the market is starting to buy into this notion that the pause is coming, we've done enough, inflation's going to go away, the miracle has happened. I have my doubts, but the market today didn't, so the market rallies up. Same with the bond market rallying today, prices up, yields down. The 10-year, 3.70, down another 5 basis points. A ridiculously low number for the 10-year, especially with the 2-year sitting at 4.48%, down 3 basis points. Basically, the 2-year at 4.5%, the 10-year at 3 and 3. Now, this is a huge gap in here now, guys. We're talking a lot, 78 basis point gap inversion. So the 2-year much higher than the 10-year, which is just abnormal. And now the gap between them is just continuing to get bigger and bigger. This does not bode well for our economy or the bond market. I can't wait to see how all of this stuff starts to flatten out. I don't know how they're going to pull it off. I'll get into some commentary later. Back to the markets. Dollar today. Not a great day for the dollar, down almost a full point on the index, sitting at 106.08. Still super strong number, but not as strong as it was. It peaked out at about 100, a little over 114 on the index, coming down today and continuing kind of, looks like the trend now for the dollar being down. With the dollar being down almost a full point, metals rally today. Gold up 1050, sitting at 1750. Silver up 47 cents today at $21.54. I've really had the feeling for a little while, I've been saying it on the show, that precious metals, I think, are looking for a reason to rally. The dollar weakening, of course, is one of the big reasons for metals to rally. And I think you're going to see some pretty nice prices coming up soon on gold and silver, especially as the dollar continues to come back down to planet Earth. The oil market today, well, unlike gold, market was down pretty significantly, with oil down more than 4% today at $77.45 for a barrel of West Texas Intermediate. Natural gas, on the other hand, wild gyrations, again up over 7.5% today at $7.28 for their million BTUs. If you look at the chart for natural gas, it just is just crazy looking. Oil's kind of been in that trough. Now it's broken support pretty dramatically. It's going to be fascinating to see where these markets go. Looks like OPEC now fighting to try to create support for this price. Everybody has their doubts about China, who's probably buying their oil from Russia anyway. Anyway, the good news is oil prices are down. My question is, when do we see some more of this oil prices down at the gas pumps? Because I'm not really seeing it here in Nevada. I don't know about the rest of you guys. Maybe you could chime in the comments. Are gas prices coming down where you are? They're not in Nevada. Bitcoin today rallying nicely, up $433, $16,539. If you're in crypto and you have even a concern about it, this rally is your chance to sell out. If you have a big percentage of your portfolio in Bitcoin and crypto, be very, very cautious. This is okay to have as a small percentage of your portfolio if you want to speculate. But if the bulk of your portfolio is in Bitcoin, is in some of these other cryptos, please, guys, be very, very cautious. This is not the time to be losing your principal, okay? The principal being your own money. If you have speculative and you got a big position and you're up money, that's one thing. But if you've been losing on crypto and you're hanging on for this rally that's probably never going to come, or if it does, who the hell knows when, be very, very cautious riding this downslide, guys, okay? Market news today, stuff you need to hear before we take off for Thanksgiving. Unemployment numbers today. This is the one we kind of been waiting for, coming in higher than we expected. They had an estimate of 225,000, coming in at 240,000. Not a giant miss here, okay, but enough to give the markets a little bit of a happy bump, because the Fed, one of the things they believe is causing this inflation is the employment is too strong, the job market's too hot. So seeing a number like this gives the market a little thrill, and they go buy stocks. I don't know, if this is going to last. I think the market's still hot. There's still a lot of jobs. I'm hearing mixed signals. A lot of people are saying getting hired, getting interviews is real easy. Seems like almost half are saying that they're trying to get interviews, they're applying everywhere, can't get an interview. So I'm not exactly sure. This employment thing seems kind of weird to me with all these openings, but people can't seem to find jobs. Interesting, because all we're hearing about is layoffs. They don't really print when companies are hiring unless it's like this new company is moving into Vegas and now they're going to set up their first store and they're going to hire people, whatever. That I get, but companies that already exist and are just adding on to their personnel, typically that doesn't make the newspaper. When they lay off, like these tech companies in Silicon Valley are all doing right now, well, that does make the news. So this employment number, a little bit of a boon for the stock market, a little bit of relief for the Fed. Truthfully, probably better for all of us investors that it came in this way rather than hotter than they were expecting. This is going to lead the Fed to believe they're on the right path with their hikes. I don't know if it really gives them, this is not so dramatically higher than what they expected that it gives them a reason to pivot or to pause even in their interest rate hikes, but we'll see where the market goes. Other news today, business spending was up. This is business spending on equipment that is not related to defense. So companies expanding their factories, buying new equipment, was up 0.7 for October, as opposed to down 0.8% in September. So I guess they're, month over month is pretty much flat, right? If you average those two together. But, business spending is holding up. Some signs in this economy are still pretty decent. Actually, another sign today, new home sales actually tipping up today, ticking up. Crazy. I can't believe it because they're still so expensive. But I had to go looking into why new homes are selling, especially since we just said yesterday on the show that 18% of every contract to purchase real estate in the month, canceled. So when you got 1 out of 5 canceling, how do you get new home sales up? Well, here's how. First of all, they're dropping prices and adding massive incentives to people to buy these houses. But the big thing is build to rent. That's what their euphemism is for corporate takeover of real estate. So what's happening now is the corporations, the Blackstones, the BlackRocks, the Carlyles, and all the rest of these giant private equity groups, hedge funds, in this real estate market, buying up everything in sight, helping with new home sales, because they're just literally going in and buying up whole neighborhoods. The builder goes to them, we have 100 houses, we'll take them all. So we'll see how that works out over the long term. Right now, though, good for builders. Here's the news that I thought was interesting today. Before the Fed goes into their Federal Open Market Committee meeting pretty much every month, I guess, They go silent about a week before that. So they want to, they don't want any hinting and talking. They don't want these Fed guys out there before the meeting. But Powell is St. Jerome, our buddy, is scheduled to speak on the 30th, 2 days before they go on radio silence, at the Brookings on the economy and the labor market. I can't wait to get the results of this stuff, because I think that what they did today in these markets, kind of cherry picking through these Fed minutes to come up with this, what they wanted, the result they wanted. I think we're going to get Powell now coming in and pretty much stamping out this idea that they're not going to continue to raise rates until this inflation comes down. They've raised rates from 0 to 3.85%. We were basically at 0.1, right? 1/10 of 1%. Now we're at 3.85%. They've managed to slow down inflation. It's not rising as quickly as it was just a few months ago, but it's still out of control. 7.7% is not a number to celebrate, guys. It just isn't. So I think Powell's going to come out and be pretty strong. I can't wait to see the market skid to a halt and reverse the big optimism that's been happening over these last few days here. I tell you guys this. This is not going to be something that's over quickly. The Fed can't wave their magic interest rate wand and get inflation down. We need less demand. And if people are still making money, if people are still, getting jobs and the employment market looks good, people aren't getting kicked out of their jobs, and if they are being laid off, they're finding other work quickly, well, guess what? People are going to spend money. And we need less of that to bring this inflation down. So people are still borrowing money like crazy. We see these consumer debt numbers going up, credit cards, consumer loans, and everything else going through the roof. So rates are not high enough yet to get the demand down on this kind of consumer loan stuff. So consumers are going to continue to borrow and spend, like they're learning from our government, which is what they do. Well, guys, I tell you what. You guys know my opinion. I think this inflation is going to be here. I think next year is going to be a very difficult year, especially with interest rates. Now, you'll remember, some of you guys are diehards, have been watching the show since we very first started it. It wasn't long ago I showed this sheet to you guys. Okay, this is the prediction that I was reading for where interest rates are going to go for 22, 23, and into 24. Okay, they actually had all the way through 26. I didn't print all that. What was interesting is when I printed this, rates were really low. And when I saw they were expecting at the end of the year the mortgage rate to be 7.95%, I kind of laughed. I was like, there's no way rates are going to be that high. There's no way. Well, guess what, guys? If you look at this sheet, I'll see if I can get Jordan to post this. If you look at this sheet, these guys have been uncannily accurate on where rates are. Now, right now they're saying at the end of November, the mortgage interest rate will be 7.5. Guess what? Pretty friggin' close, guys. Very close. Now they're saying at the end of December, 7.95%. So now they're anticipating this next Fed increase coming up here next week probably. And mortgage rates going up a little bit higher. Here's the bad news. Here's the bad news. These guys have been uncannily accurate. And I hope they're not going to be accurate next year, because they're basically having us with mortgage rates ranging from 8.5% to over 9%. 9.5% they're predicting by the end of next year. Does that sound like interest rates are coming down to you guys? And these guys they've nailed it. Nailed it. I would tend to agree with them rather than these rosy predictions. We have to live in the world as it is, guys, not as we wish it was. People, I think, are regretting some of the things they did when times were really good. failing to prepare for when times weren't going to be so good, maybe being a little more less flashy and spending, a little more saving and investing. But these are all lessons everybody needs to learn throughout their life, so that the next time this situation rolls around, they know from their own personal experience what to do about it. Anyway, guys, it's going to be Thanksgiving tomorrow. And remember, no matter where you are in your life, no matter how good or how bad things are, we all have a lot to be thankful for. I wish all of you guys, each and every one of you, a very, very joyous and happy holiday. Stuff yourself with turkey and stuffing and ham and all the stuff we do for Thanksgiving. Lots of pumpkin pie. My beloved Bills tomorrow morning. We got the Lions. We're going to win. And a nice day of football, family, and food. Enjoy it, and really take some time to be thoughtful about all the wonderful and good things in your lives, the things you're really happy and grateful for. As a matter of fact, if you guys want to, in today's comments, how about putting down some of the reasons you guys are happy, some of the reasons you're grateful at this Thanksgiving. I'm going to be back on Friday. We'll wrap this week up. It'll probably be a short video on Friday. There won't be much trading that day. Have the very, very best of holidays. Enjoy your families. Enjoy your friends, and you relax. We'll be back on Friday. Wrap up the crazy week in a crazy month and a crazy year. Anyway, guys, all the best to each and every one of you. Happy Thanksgiving. We'll see you on Friday. Until then, take care. Thanks.